The fragile trade truce between the United States and China has collapsed overnight as Beijing abruptly cancels its commitment to purchase massive amounts of American energy. This stunning reversal, announced by Chinese state media, directly undermines the agreement reached between President Trump and President Xi Jinping just days ago. The cancellation has sent shockwaves through global markets, threatening the American energy sector and reigniting fears of a renewed economic conflict. For President Trump, who touted the energy deals as a major victory, this is a public setback that raises doubts about the stability of any future agreements. As the world watches, the U.S. must now confront the fallout of a deal that promised much, but has vanished, leaving uncertainty and risk in its wake. The now canceled energy deals were set to anchor the American economy, representing not just a series of business transactions, but a cornerstone of President Trump's broader vision for American prosperity. These agreements were designed to leverage the United States' growing dominance in oil and natural gas production, turning energy into a powerful tool for economic growth and international influence. Under the terms, China had committed to purchasing vast quantities of U.S. liquefied natural gas and crude oil, an arrangement that would have funneled billions of dollars into American industries, while also helping to balance the persistent trade deficit between the two countries. For the U.S., these agreements promised a stable, long-term export market, encouraging companies to invest in new pipelines, export terminals, and shipping infrastructure. The ripple effects would have supported thousands of jobs, from engineers and construction workers to port operators and logistics specialists. For China, the deals offered more than just a reliable energy supply. They were a diplomatic olive branch, signaling a willingness to cooperate and reduce tensions after years of escalating tariffs and trade disputes. Energy security is a top priority for Beijing, and these imports would have helped diversify its sources. The deals were deeply tied to President Trump's economic philosophy, using America's energy abundance to reduce the trade deficit and showcase the power of bilateral negotiation. Trump often touted these agreements as proof that his America First approach could deliver real results, both at home and on the world stage. Energy exports were meant to be the ballast, stabilizing the turbulent U.S.-China relationship, providing a foundation of mutual benefit even as other issues remained contentious. The hope was that shared economic interests could keep diplomatic channels open and prevent further escalation. But with the abrupt cancellation of these deals, the central pillar of the recent truce has been removed. Both nations now find themselves drifting back into strategic competition, with energy cooperation no longer serving as a buffer against broader tensions. The collapse signals that transactional cooperation has given way to renewed distrust, leaving the future of U.S.-China relations more uncertain than ever, and raising questions about whether energy can still play a unifying role in a world increasingly defined by rivalry. President Trump's vision of American energy dominance aimed to make the U.S. the world's top supplier of oil and gas, using energy as a tool of foreign policy. The China deals were seen as the ultimate validation of this strategy, locking in demand from the world's second-largest economy. By securing massive purchase commitments, the administration hoped to reduce the trade deficit and create American jobs. China's withdrawal strikes at the heart of this agenda, challenging the notion that the world is dependent on U.S. energy. The cancellation exposes the limits of using energy as a bargaining chip in high-stakes trade disputes. Trump's vision remains, but its most significant proof point has vanished. China's decision has thrown American energy companies into turmoil, jeopardizing billions in investments for new LNG terminals, pipelines, and drilling projects. Thousands of jobs in states like Texas, Louisiana, and Alaska are now at risk as hiring freezes and layoffs loom. The ripple effect threatens not just major corporations but also the smaller businesses and suppliers that support the energy sector. The sudden loss of China as a buyer leaves companies with stranded assets and uncertain futures. This crisis highlights the risks of tying national trade policy to large, politically sensitive deals. When diplomacy fails, the economic pain is immediate and deeply felt by American workers and businesses. The shockwaves from the canceled energy deals are spreading across the American economy, reaching far beyond the oil and gas sector. The abrupt halt has triggered a ripple effect, unsettling markets and leaving business leaders scrambling to reassess their strategies. Uncertainty is now the new normal, as companies across multiple industries brace for the fallout. Farmers, who were counting on renewed Chinese purchases of soybeans and other crops, now fear Beijing could halt agricultural imports as its next move. For many rural communities, these exports are a lifeline, supporting not just individual farms but entire local economies. The threat of losing access to the world's largest market for U.S. agriculture has left growers anxious about their future, with some already reconsidering planting decisions for the next season. The tech sector is also vulnerable, as China could reimpose export controls on rare earth minerals, threatening U.S. manufacturers and defense industries. These critical materials are essential for everything from smartphones to advanced military hardware. Without a stable supply, American companies could face production delays, higher costs, and a loss of competitiveness on the global stage. American factories, already battered by tariffs, face the prospect of a return to a full-scale trade war, with higher costs and job losses looming. Many manufacturers had hoped the truce would bring relief, but now, the specter of new tariffs and disrupted supply chains threatens to undo years of recovery. Workers worry about layoffs, and small businesses fear they may not survive another round of economic turbulence. The collapse of the energy deal undermines the entire truce, making it likely that other parts of the agreement will unravel. Trust between the two economic superpowers is eroding, and with each broken promise, the risk of further escalation grows. Businesses that once relied on stable trade relations are now left in limbo, unsure of what the future holds. With incentives for cooperation fading, anxiety is rising among farmers, tech workers, and manufacturers. The uncertainty is palpable, as livelihoods hang in the balance and communities brace for more economic pain. Many are calling for urgent action from policymakers, but solutions remain elusive. The breakdown shifts U.S.-China relations from cautious negotiation to open hostility. As tensions mount, the risk of a prolonged standoff grows, threatening not just businesses, but the broader stability of the global economy. China's reversal has ignited a political firestorm in Washington, with Democrats calling it a failure of Trump's foreign policy and Republicans divided over the economic fallout. Some GOP leaders publicly back the president, but internal tensions are rising as the economic pain spreads. The American public, weary from years of trade disputes, now faces renewed uncertainty, job threats, and the risk of higher prices. This event is fueling debate over whether to decouple from China or seek a more stable diplomatic approach. If layoffs and inflation mount, public frustration could force a major policy shift. The U.S. now faces urgent and complex challenges. Chief among them is finding new buyers for its vast energy exports, as traditional markets become less reliable and global demand patterns shift. American oil and gas producers, once confident in steady overseas contracts, are now forced to adapt quickly to a changing landscape. At the same time, policymakers are working to prevent the total collapse of the fragile trade truce with China, a situation that could have ripple effects across the global economy and threaten American jobs. The administration faces a critical decision, whether to retaliate against new trade barriers or attempt to salvage what remains of the agreement, knowing that either path carries significant risks and potential rewards. Leaders must carefully balance the risk of escalating tensions, which could spark a broader trade war, against the urgent need for economic stability and predictability for American businesses. Yet, within this crisis lies a unique opportunity, the chance to diversify trade relationships, open new markets, and reduce the nation's dependence on any single trading partner. By investing in innovation and expanding into sectors like advanced manufacturing, clean energy, and technology, the U.S. can build a more resilient economic foundation and reduce its reliance on China. Strengthening ties with allies in Asia, Europe, and other regions is essential. These partnerships can help the U.S. weather global disruptions and foster shared prosperity. Building a broader, more inclusive economic network with trusted partners could make American industries more competitive and less vulnerable to sudden shocks. This setback may also serve as a catalyst for greater investment in advanced manufacturing, biotechnology, and renewable energy, sectors that promise high-quality jobs and long-term growth. By reducing reliance on commodity exports and focusing on value-added industries, the U.S. can better insulate itself from global price swings and market volatility. A renewed focus on strengthening critical supply chains, ensuring that essential goods and materials are sourced reliably, could make the U.S. economy more robust and adaptable in the face of future disruptions. In the short term, the outlook remains uncertain. Markets are volatile, and businesses are bracing for potential setbacks as negotiations continue and new policies take shape. But in the long run, this moment could be a turning point, an opportunity to build a stronger, more diversified, and future-ready American economy that can thrive in a rapidly changing world. The collapse of the US-China energy deals marks a turning point, ending the era of engagement as a path to cooperation. China's willingness to weaponize economic ties forces the US to confront a more adversarial relationship. America must now recalibrate its strategy, moving from transactional deals to building alliances and setting new global trade standards. By working with partners to promote transparency and fairness, the US can shape a system that favors open societies. The failure of the energy deal exposes the risks of relying on a single, unpredictable partner. The challenge is to manage immediate fallout while forging a new, long-term strategy for great power competition. The choices made now will shape America's global role for decades to come.